and welcome back to Mining Networks. I'm joined today with Quentin Yari, who is CEO and President of Red Pine Exploration. So thank you very much for joining me today, Quentin.
Thank you, Emma. Thanks for having us.
So let's just start by getting a nice brief overview of the company.
Okay, Red Pine Exploration is a junior exploration Canada. We're in Canada, in Ontario, not really northern Ontario, sort of central Ontario, in a community called Wawa. Our story is actually fairly simple. We have, resources in inferred and indicated, and our goal right now is just to prove that we have more gold. So, there's no doubt there's gold on the project. Our exploration is focused on expanding our resources at the moment.
Brilliant. So run us through your capital structure, so market cap, share structure, that sort of thing.
Yeah, most recently we've seen a significant increase in our market capitalization. I think that's sort of reflected by recent news, but also I think we see the market recovering a bit. I'd like to say it was all news, but I don't think that's the case. Currently we have, fully diluted 146 million shares outstanding. Warrants, there's only 4.8 million warrants outstanding. Most of those are broker warrants. Fairly tightly held. Our largest shareholder is Alamos Gold, who is actually a neighbor of ours, and they're 40 kilometers away. So they've taken an interest in us.
Awesome. So we'll touch on neighbours a bit later on, I'm sure. But you mentioned there about the recent news. So you're up over 100% in just the last 2 months. So what is the catalyst there? Could you talk me through this?
Well, I think there's a few things. Again, I think we're seeing some rebound in the market. I mean, most junior exploration companies in Canada were trading at their all-time lows in December. And we've rebounded from 19 cents, and we're touching on the 40 cents right now. So, obviously it looks very good. We had two, I think, important press releases in the last few weeks. The first was a summary we did of our 21-22 exploration plans, where we announced that we had discovered an intrusion-related gold system adjacent to our resources. And what that's having us do is relook at the type of model we would use for coming up with a resource. So we've moved from an underground resource sort of model to a pit constrained, or some combination of those two, revisit that. And then the press release just last week, we had a great intersection outside of our resources, which was in the hanging wall of one of our existing resources. And that was, 25 grams over 3.4 meters, which it wasn't the real highlight, but there was 5.13 grams per ton over just over 37 meters. So quite a thick sequence sitting on top of our existing resources. And I think that fits into the open pit model we began discussing over 2 months ago.
Awesome. So talk me through the history of the Wawa district here. So before you guys acquired it, was there much work done? And then since you've acquired it, what have you done to get to where you are today?
And the Wawa, or the Michipicoten Gold Belt, has seen work for centuries. Okay, it is and was Ontario's first gold rush. So prior to Timmins, prior to Kirkland Lake, and our property's seen gold production from the 1890s through to approximately the 1980s. So there's actually 10 past producing mines that sit on our property. All of those were fairly artisanal in nature, meaning that they were small, but the grades that were taken out of there, sort of averaged just over 12 grams per ton over that long period of time. So that's actually what intrigued me to coming back to this place. And we've seen significant investment by other companies in the camp since we got involved. The largest of that being Alamos Gold, with their purchase of Richmont Mines just over 4 years ago for almost $1 billion Canadian dollars. So there is interest in the camp. I think we were early movers, so we ended up with a great land position.
Very cool. So let's now dive into the geology a little bit. So what does this deposit actually look like geologically? And then talk me through the resource, inferred and indicated that you have.
Right. Our resource is a little different than we see others in the camp. Our main anchor point is what we call the Saluga deposit. And what's interesting about it is it's very thick. So it's approximately 600,000 ounces in inferred and indicated, but the average mining width would be 10 meters. So it averages just over 5 grams per ton. but over a great thickness. And what that gives us is approximately 2,000 ounces per vertical meter of development, which is a very, very good metric. We've established that resource over approximately 1.2 kilometers in strike length, but only down to a depth of 90% of it is above 300 meters from surface to 300 meters. So very shallow. We've constrained that in underground resource. And then the other resource we have on the property is what we refer to the Minto Mine South resource. And it is more typical of what you would see, for example, at Alamos's Island Gold. It's narrower, 3 to 5 meter mining widths, but quartz tourmaline vein, very distinct, lots of visible gold, lots of free gold, and much higher grade. So it's approximately 100,000 ounces at just over 7 grams per ton.
So what's the room for growth here? So you've mentioned the size of the resource there. So what are you doing as a company to try and grow this? Is that the plan or?
Well, for sure, that's the plan. We want to hit that critical mass. And I don't think it's been any surprise to any of our investors is that we're trying to set ourselves up to be acquired. So we're trying to de-risk this thing. But to do that, we need to hit a critical mass of number of ounces in the ground. As I mentioned, the 2 current resources remain open along strike and to depth, and we've only looked very shallow. So we've now established that the host of the Saluga deposit, which is a large shear system, so sort of orogenic gold, felsic intrusive that's been destroyed multiple times, and it extends over a strike length of just over 6 kilometers, and we've looked at, as I mentioned, 1 to 1.2 kilometers of that, but also very shallow. If we look at our neighbors like West Dome and Alamos, the Island Gold Mine, their grades got better with depth, and they also had greater gold continuity with depth. So there's no reason to believe that we are not subject to the same parameters moving forward.
Yeah, no, I was going to touch on the neighbours next, but you kind of answered it there already. So talk me through a little bit about, the geology, it's quite continuous, you would say, with your neighbours, or are you different to them?
We're very similar. The alteration packages appear to be the same. I think one of the things that does set us apart, again, would be the thickness of the Saluga deposit. That's a little different. It tends to be more homogeneous gold, lower grade, but greater thicknesses. The other thing that we announced that would make us a bit outstanding from that would be the intrusive related gold system that we've discovered west of the Saluga. Now, that's typically not high grade. We're sort of looking at great thicknesses of just somewhere between 1 and 2 grams per ton, but these can be very thick, up to 100 meters thick. So that makes us a little different. And also, obviously, that works better with, an open pit model for sure. And it allows us to add ounces in a real hurry with each drill hole. So that sets us apart a bit. I think the other thing for us is we've seen a lot more structural alteration, many more structural events than our neighbors had. And that's why there was 10 past producing mines on the property, and they were all associated with different structural events. And we now own all of those. So we have lots of things to look at, but our main focus is to grow the 2 resources that we have.
Yeah, no, of course. So talk me through a little bit about your management team. What sets you guys up to kind of be successful at this?
Well, I've been doing it a little while, but our VP of exploration, I would suggest, is one of the best PhD geologists in the industry at the moment. I mean, he's focused on alteration. He's a geochemist and a geoengineer, or an engineer as well. I rely on him a lot. But however, our management team is excellent. If you look at our board of directors, for a junior exploration team, it's sort of a who's who, I would suggest, of the industry. I mean, we have, and it's truly independent. Paul Martin, the ex-CEO of Detour Gold, he has joined our board when we did the consolidation of the ownership of this property 2 years ago. This is the first board he sat on. We also have Andrew Bowman. Andrew, C-suite executive from Barrick, who ran the Hemlo gold mine, for decades. I don't want to age him, but this is also the first board he has sat on. And then the others are truly independent as well. So we have a very strong board that provides a lot of expertise and helps guide management down a path.
And the jurisdiction you're in, and also your relationships with the local stakeholders and First Nations, could you talk me through that and potentially the time frame for permitting in the area?
Right. I mean, we are, I think, in one of the best jurisdictions, if not Canada, Ontario. As I mentioned, there's been exploration or active mining where we are since the 1800s. So our neighbors are used to seeing extraction process, whether that be gold, iron, or anything like that. The community is quite interested in what we're doing. We do have agreements with the First Nations that are associated with our property, and there's three of those. That's Michipicoten First Nation, Garden River, and Batchewana. We maintain a very good relationship with them, and we have to, and we want to. It's not just that we have to; we like doing it, and they are positive in what we're doing. So that's great.
Very cool to hear. So talk me through, what do the next 6 months look like? So if I was an investor, what key milestones should I be looking out for?
Well, last year we drilled a lot, and like anybody in the industry right now, assays are lagging. We have lots of assays, in the lab pending results, and we continue to add to that backlog. We currently have one drill turning, and we drill 12 months of the year. So investors should continue and expect to see regular news flow from us in the next 6 months for sure. We do have a drill program plan this year with a focus, again, very much on proving the expansion of this resource so we can hit that critical tipping point whereby, we've de-risked this thing enough that it's a purchase opportunity for somebody, either in the camp or outside the camp.
Mm-hmm. So what does the drill program look like this year? Could you talk me through what's the meterage plan and also how you identified the new targets?
New targets are going to be based on our results from last year. We proved successfully that gold mineralization extends to at least 600 meters vertical depth, which is a step out of over 400 to 500 meters from our current resource. So there's some infilling to do. We proved that there's mineralization extending at the north and the south end of each resource. So the easiest thing for us to do right now, the low-hanging fruit, is tie that into the existing resource structure, which would allow us to expand the number of ounces on the property. Number of meters wise, that's always a function of funding. Right now we have one drill turning. We're averaging almost 2,000 meters a month though with that one drill. So, that's sort of the meterage you can expect unless there's a change in the financial market where we can take advantage of additional funds. We would definitely add to, another drill or two if the opportunity presented itself.
Yeah. So just a nice way now to conclude this interview, Quentin. So if you could kind of envision Red Pine any way that you would like, what do the next 5 years look like? What's the ideal here?
I don't think we'll be around in 5 years. That's the ideal. I think the clock's ticking on what we're going to be allowed to do here. As we've talked about, our market cap is increasing, and I don't think it would be an issue for us to fund in the future as long as we continue down this path. So, I think for us, a true timeline is probably 1 to 2 years, if that long, before we start entertaining offers on an acquisition or an exit strategy. We're an exploration company. We're not a production company. We know that. We're treating it as if it's going into production. Obviously, we're advancing it in that method, so we're drilling it out that way. But I think it's, the short and the long-term goal.
Well, thank you so much for your time today, Quentin. We look forward to following along with the story here.
Great. Thank you.